everyone, it's me, CNB, and today I'm back with another ASMR video. Tonight's video is a long-awaited stock update video for you guys, and as you can tell by the title, we have been doing work. We've been saving our money, we've been investing wisely, and shout out to Roku. We are now over $25,000 between our Robinhood and Acorns accounts. So I figured it would be a great time to take a look and see how I have $25,000 invested across my accounts. And I figured this would be probably a video that might go out to a couple of people that might not be familiar with my channel. I am ASMR Collect and Play, otherwise known as CNB. And I've been doing these little updates for quite some time, and finally, we're starting to really gain some momentum. So I'm going to be sharing all of my stocks that are in my portfolio, as well as, the accounts that I am invested in on Acorns. So sit back, relax. If you're not already subscribed, please hit that subscribe button. If you are already subscribed, thanks for stopping by. Hit that like button, comment down below, and enjoy. Alright guys, here you have it. $20,879.87. Last time, and now I will say a disclaimer for the guys that are returning, for the audience that is returning to the channel. They've been watching these updates for quite some time. Yes, I have thrown in quite a good bit of cash. I came across a bonus at work. We get quarterly bonuses, and it was a really good bonus this quarter, guys. So I was able to throw in a lot of that, as well as Roku, as our number one holding, has been on an absolutely legendary run, especially today. So we're gonna go through all of our portfolio one by one. I'm gonna tell you about each, how long I plan on holding all of them, which is forever, unless the fundamentals of the company change, or some bad PR comes out. Whatever. I mean, things happen, obviously, but I don't have any intentions on selling any of these holdings at all. But let's take a look at our first stock, which is Roku. Roku is up almost 12% today. Started the day off at 135, ended at almost 150. This is my number one holding at 60 shares, which actually was 70 shares. We have almost $9,000 in equity built up in Roku. It is 43% of our portfolio diversity. And as of today, which, for the record, I should give another disclaimer. The average cost is not the true average cost. I had it at I've had this holding for a long time. I used to be, I think I first bought in when it was in like the 110 area, and then it shot up to 150. I sold it at 150 and bought it back around this level, and of course then it dropped all the way back to like the 100 area. Actually, I think it dropped all the way to about 60. Yeah, our true cost average is probably around 110 if I had to guess. So we've actually made more than $101 that it says in the bottom left. We've probably made closer to, I don't know. I couldn't tell you. I'd have to really think about it. Close to $40 per share, and we're still holding 60 shares, so that's quite a bit of cash. $2,400 of return right there, if I'm just guesstimating. But but Roku makes its money off of advertising. Roku is the smart TV. Let's scroll down. Roku engages in the provision of streaming platform for television. It operates through the following business segments: player and platform. The player segment consists of net sales of streaming media players and accessories through retailers and distributors, as well as directly to customers through the company's website. Its platform. Its Roku platform allows users to personalize their content selection with cable television replacement offerings and other streaming services that suit their budget and needs. So, it is the classic cord cutter stock. It's going to be the future of television. I'm telling you, it already is. If you don't have a Roku, I don't know what you're doing, man. You got to get your hands on one of these things. They are so easy to use and very convenient, in my opinion. Streaming is the wave. It's the future. And I really, really love Roku. I'm going to be holding at least these 60 shares for quite some time. I wouldn't be surprised if we see this stock go all the way up to $200 before the end of the year. But that's just a bold prediction on my part. Another disclaimer: I am not a financial advisor. I'm no professional. I'm no professional stock trader. This is just for relaxation and entertainment purposes only. Do not take my word for granted. Or rather, take it with a grain of salt, is what I should say. But yeah, that's Roku. 65% buy rating. Almost 50,000 people own it on Robinhood. If you're wondering, this is Robinhood. Also, if you want to get invested, please use my link down in the description below. You will get a free stock when you sign up. But let's continue. Let's go back and let's take a look at our next stock, which is Trade Desk. It's almost down a full percent after hours, but that's okay. That's okay. Our average cost, guys, $160.70. I bought all 5 of these shares at one time for $803.52, and it is now worth almost $3,000. Wow. Scratch that. Almost $2,300. 185% return in, let me scroll down actually, market buy 5 shares on March 19th. So March, April, May, June, almost 4 months, 3.5 months. I've made 185%. Let's take a look at the 3-month chart on this bad boy. Look at that. Look at that 1 year. Look at that insane dip. We bought right near the bottom of the crash that happened back in March. This will probably end up going down as the best buy opportunity that I've ever taken. Just absolutely nailed this one. I missed the mark by say like 5%, 7% or so. So not too bad of a long-term play right there. I'm going to be holding Trade Desk for the foreseeable future. At some point, I might have to trim it a little bit, but I'm going to be holding this for a long time. I love this company. They are similar to Roku in the sense that they make their money off of advertising. Let's see, the firm's product includes audio advertising, mobile advertising, native advertising, data management platform, cross-device targeting, and inventory and marketplaces. So basically, they're like a merchant of ad space, I guess. Technology platform for advertising buyers. So advertisers buy these ad spaces and then put their ads on those spaces, and Trade Desk is in the business of selling those ad spaces, if that makes sense. They make sure that your ads are getting in front of the right eyes, the right market. But yeah, almost $460 a share. Absolutely insane growth. Was $463 at the market close, so absolutely crushed it with this buy. invested in some of the same stuff that I am in. Trade Desk has been a winner for me overall. Obviously, 3 months up 116%, insane. By the way, let's go back and look at Roku's 3 months, 58%, 45% in the last year. See, it's been up and down. It's been a bumpy ride, but of course, all of this was related to the, the thing that we will not name. Anyways, next up, Disney. We have 20 shares of Disney. Makes up 11% of my portfolio. $2,300 of equity here. I feel like it's worth mentioning at this point that there are different tiers of ownership that I have in each company, and we'll take a look at those tiers at the end. But you guys know what Disney is. It is the Walt Disney Company, also called Disney, is a diversified international family entertainment and media enterprise. You know what? I'm not even going to go through this description, guys. You know what Disney is. Pixar, all the Marvel movies, ESPN, Hulu. They actually own Hulu. They pay a dividend as well. We have an average cost of $114.76. So we are actually at a gain over time, plus they pay dividends. So we have 20 shares. We will get paid for each one of those shares a certain dollar amount. It's actually probably less than $1. It'll probably be something like 88 cents or something. I can't remember how much Disney's dividend is, but this is definitely a good buy opportunity here. Let's take a look at the 3-month chart on here, up 15%. But if you look at the yearly, down 17%. They were up before. In 2019, they were at 151. So, whoops. I would expect them to get back to those levels at some point in the future. So I'm going to be holding until that happens for sure. Disney is not going anywhere anytime soon. Next up is Cisco. And Cisco is a technology company. We have 45 shares here with a $46.83 average cost. A little bit over $2,100 in equity. We are currently at a loss, but again, Cisco is also a dividend company. I believe they pay something like 36 cents a share, which doesn't sound like much, but they pay it quarterly, and it's basically free money for just holding on to the stock. So, plus Cisco, I don't know if you guys know, but if you're watching this off of Wi-Fi, chances are it's a Cisco router that you guys have in your home. Cisco engages in the design, manufacture, and sale of internet protocol-based networking products and services related to the communications and information technology industry. The firm operates through the following geographical segments. Yada yada yada. They have switches, routers, wireless network management interfaces, and modules, optical networking, access points, etc., etc. Pretty solid dividend yield. They've been around for a long time. Really, really solid company. I'm going to be holding them for quite a while. As you can see, they are in my tier 2. Like I said, we'll go over the tiers at the end. I definitely don't have the same amount of equity in each company. It's a little bit split up. But next up, we got Delta Airlines, which again needs no introduction. They are the absolute leader in airfare, air transportation, the airline industry. And we have 40 shares. It's just under 5% of my portfolio. Over $1,000 in equity. My goal was to get $1,000, which I actually trimmed from my Roku position today and used that money to build up the my Delta holdings. I believe I bought something like, let's see what I bought today. I bought 15 shares at $25.75 a share. So really almost doubled my position here. Anyways, Yeah, Delta Airlines needs no introduction. They are a dividend payer. However, I don't see them paying any dividends for the foreseeable future, not until things really get back to normal levels that they were, back last year. Travel is probably down. Things are starting to open back up, obviously, but there is definitely a lot of room to go here with travel and airline growth, but Delta will not fail. I have the utmost confidence in Delta and what they will that they will come out on top of this on the other side. So that is what we have here, $1,000 in Delta. Next up, we have SkyWest. We have the same amount of shares. We have 40 shares in SkyWest, which is another airline. Again, another transportation airline, airfare stock. SkyWest is at $28 a share right now, $28.09. It's got an 86% buy rating and a little bit over 5% of my portfolio as well. We have a cost average of $27.35, so I've only made 2% on SkyWest so far, but definitely going to be holding for at least another year. You can see before the crash they were at $66 a share, so an easy double up opportunity if things just normalize back to the levels that they were at before all of the drama happened. We'll just call it drama. But like I said, if things can just get back to this level, which also they were eligible for a forgivable government loan, something like $500 million that they were granted or something like that. So that just went straight to their bottom line. So they're definitely gonna be able to hold out. Let's see, where are they out of? They're out of Utah. Okay, I think they're definitely, obviously, it would make sense they're a little bit bigger in the West. This is more of a domestic play in the United States. Delta, of course, is international. SkyWest, I don't believe is international. I think they are more so focused domestically, which I think is good. We bought, how many shares did we buy today? 5 more shares at $28.09. Did we win? Wow, well, it's at $28.09 still, but 40 shares here. Like I said, 5% portfolio diversity. Definitely going to be holding on to SkyWest for at least a year, at least. Probably more like 3 to 5 years. SkyWest and Delta included, both of those. Next up, we have BlackBerry. Now, BlackBerry is $4.77 a share. As you can see, we have 150 shares here. Cost average of $4.85. So we are at a loss currently. It is only 3%, 3.4% of our portfolio. This is probably the riskiest play that I have on my portfolio. I know what you guys are thinking. BlackBerry, isn't that like the phones from back in like 15 years ago? If you're like me, your parents, if they were business, if they had a business phone, chances are it was a BlackBerry. It was like the original smartphone. But what you guys don't know is they have a lot of technology patents. Specifically, the ones that I'm interested in are the autonomous vehicle. Like they have a play on autonomous vehicles. They have something called the QNX software. The autonomous vehicle industry offers promising upsell opportunities for BlackBerry's QNX software, which my understanding is the QNX software is has something to do with like the entertainment system, the dashboard, like the GPS system. What is that called? Just your dash, I guess. Your computer inside of your car. 82% hold rating, 18% buy. So no one is saying to sell BlackBerry. chances are I could see BlackBerry possibly getting bought out by, the likes of a bigger company. I don't know who, but they definitely are in that autonomous vehicle play. Everything that I've read said that BlackBerry is worth a play as far as, they are a leader in that industry as far as that QNX software goes, and it kind of goes hand in hand with my next holding, which we will actually swap. We will skip over Stitch Fix for now and go and take a look at Uber, which is my newest holding. Uber, I have 30 shares of Uber at $32.73 a share, so we're currently at a gain, or at a profit. It's just under 5% of my portfolio. You might be able to see a trend already, but again, we'll see at the end if you guys stick around to the end. But yeah, Uber here is $33.15 a share, just under $1,000 of market value, market equity in Uber. I think I just bought them this week. I want to say, let's see, 10 shares, 5 shares, 10 shares. So yeah, looks like July 7th. Yeah, 2 days ago. How many shares do I have? 25 shares. 30 shares. I might have started last week. I can't remember. Maybe it was Monday that I bought it. But 83% buy rating. Again, obviously there's no surprise here. The Uber is my autonomous vehicle play. In my mind, I have this thought of a future where, when you order an Uber, you don't have a person come and pick you up. You just have an empty car that comes and picks you up and takes you where you need to go. I think that is absolutely fascinating. That would absolutely eliminate a ton of expenses for Uber, having to pay their drivers. Obviously, they have to pay their drivers. They would just have a fleet of autonomous vehicles that would just come and pick you up. A guy, my boss at work, he really loves this company. He really he had his eye on them for a long time, and recently they acquired Postmates, which Postmates is in the food delivery industry, which there was a lot of players in that game. There was, of course, there's Uber. There was Postmates, which is now being acquired by Uber. There was Grubhub, and there was DoorDash, which I think Grubhub and DoorDash are also merging. I might be wrong there. Don't quote me on that, but basically it's one less player in the game when Uber acquires Postmates. So a lot more. What's the word I'm looking for? A lot less market competition, I guess, how I should phrase it, which could mean well for Uber. But last but not least, we have Stitch Fix, which I have 35 shares of. Cost average under $25. It's $24.77. Right at $1,000 of equity. 4.82% portfolio diversity. You can see we have already made 16%, almost $138 on the returns here. Wow, it took a little nosedive here after hours. Down almost 2% after hours. That kind of stinks. But 59% buy rating. 31,000 people on Robinhood own Stitch Fix. So for those of you that don't know Stitch Fix, wow, it's got a female CEO tag on it. That's cool. Shout out to the female CEOs, but Katrina Lake. I don't know if any of you guys watch Shark Tank, but Katrina Lake has been on Shark Tank a couple of times before, as a shark, actually, not as a competitor. Although I heard that she actually started as like going on Shark Tank with Stitch Fix, and maybe she's partners with one of the sharks, as well as now become a shark herself. It was founded in 2011, so a very early, very young company. You can see they went public in 2017, shot up to almost $50 a share. They kind of came back down. Obviously, they've had a lot of troubles in like the last year, but who hasn't had troubles in the last year? My boss is actually a subscriber of Stitch Fix, basically. Online personal styling service that delivers personalized fixes of apparel and accessories to men, women, and kids. The company was founded by Katrina Lake and Aaron Morrison Flynn in February 2011 and is headquartered in San Francisco, California. That's actually a lie. They're moving from California. I think they're going to Texas along with Tesla. But 59% buy rating, 41% hold rating. Definitely interested on where this company can go. They're up 95% in the last 3 months, but down in the last year, so still a solid price to buy Stitch Fix. Let's actually take a look at some. I didn't really do a very good job of Uber. Look at this one, down 23%. They're up 22% in the last 3 months, down in the last 1 month, down in the last year, so a solid buy opportunity there. I usually look at the monthly, the 3 month, and the 1 year chart, like Stitch Fix. Look at this. They're up 20%, almost 100%, but down 5% in the last year. So, still solid places to get in at. Let's see, SkyWest down 28% in the last month, up 3% in the last 2 months. 3 months, down 54% in the last year. Solid buy opportunity there. Let's take a look at Delta, down 18% in the last month, up 13% in the last 3 months, and down 56% in the last year. So, in the grand scheme of things, if you're planning on holding on to this stock for a year, there is obviously a lot of time to recover this 56% loss. Let's take a look at Cisco. 3 months, up 14%, 1 month down 1%, 1 year down 17%. So if you're looking to get that rebound play, maybe go all the way up to $60 a share. Very good price, plus dividends along the way. Can't complain there. Disney, I may have already looked at these, but we're going to look at them again. 1 month down 4.45%, 3 months up 15.5%, 1 year down 16.72%. So if you're a long player like I am, go ahead and snag Disney at a discount here before it gets back to its, pre-drama levels. I can't wait for it to be back. Disney movies be rolling out, movie theaters being opened up. Trade desk, I know we went over trade desk already, 25%. Look at this, 90. Maybe it's not as good of a juicy buy opportunity on trade desk, but Roku, you're still not, you still haven't missed out. I mean, it's not at 52-week highs yet. I really think Roku is heading for the $200 range, and I'm not alone. There's analysts, there's other people out there that seem to think that, and I'm one of those people. But that is everything on Robinhood. Alright, and as you can see here, you have the complete breakdown of my entire portfolio. You have your pie chart over here, which, of course, Roku is my #1 holding with 60 shares, almost $9,000 in equity. It is my one and only prized possession stock. I love Roku so much, and it's really blown up for me in the last month. Really today or the last week, honestly, it's been crazy. But Roku is my #1 stock, and then my tier 2s, Disney, Trade Desk, and Cisco, all in the $2,000 to $2,500 range of equity. So, and then tier 3 would be SkyWest, Delta, Stitch Fix, and Uber, and maybe BlackBerry soon. I don't know. I think I'm capped out on BlackBerry unless it falls a little bit more. I might be able to gobble up some more cheap shares, but I think I'm set on BlackBerry with those 150 150 shares. I mean, if it goes to, $10 a share, then my $715 will become $1,500. So that'll be a nice double up there, and who knows what could happen if the autonomous vehicle plays out. BlackBerry could be worth $100 one day. Who knows? Who knows? If it is, I'm going to be holding on to it until then and count my monies. But yeah, there's the breakdown. You can see that my total return, obviously Trade Desk is #1 with that insanely great timing on the $160 cost average. The most I own is BlackBerry as far as a quantity of shares goes at 150, then Roku at 60, and then the least I own is Trade Desk, which is actually the third highest amount of equity that I actually have. So least amount of shares, third highest amount of equity. But there you have it. There's my Robinhood portfolio for you guys. $20,000 Robinhood portfolio. Alright, but we're not done yet. We still have Acorns to go over. Acorns is basically the same thing as Robinhood, except it does all the investing for you. So I invest $12.50 daily into Acorns. It comes straight out of my checking account, as well as anything that I purchase, it rounds up to the next dollar and invests that as well. So we have $5,400.12. As you can see, the markets as a whole were down today, so I actually lost $40 here on Acorns, where we gained quite a great bit over on Robinhood, thanks to Roku, of course. But as you can see, monthly down $101, but in the 3 months, look at that, up 12% almost, and 6 months just about even. So that gnarly dip from the drama, you can see where we have come back to pretty much normal levels. And then we'll look at yearly, which I'm up $156, and then all-time, which my all-time chart looks a little silly because I think I threw in like $4,000 that I just had in my savings account, and then I withdrew it, and then I threw a lot back in, and then I withdrew it, and it wasn't until September of 2019 that I started to do, the traditional dollar cost averaging, and it's gone pretty well ever since. As you can see, you scroll down, you can see the performance breakdown of my money. It's over $1,000 in international large company stocks, $1,000 in small company stocks, $500 in real estate stocks, emerging market stocks, $500.69, and large company stocks, $2,165. And you can actually go in and see what makes up each of those descriptions. So large company stocks is VOO. International large company stocks is VEA. Small company stocks is VB, which these are all, and then VNQ real estate it's a Vanguard REIT. These are all just investment accounts that are set up by Vanguard. It's a mutual fund that is comprised of a ton of different companies. VOO, like VOO, for example, S&P 500 ETF. I think you can download, which, alright, we won't go into that, but there's a lot of different companies from the S&P 500 that make up VOO, and it kind of just evenly distributes across those companies. But you can see it by percentage or by shares, and not only that, but you can see your potential. So let's take this down. As you can see, I'm currently 25. Well, 25. There we go. $5,413 at the age of 25. This is the classic example of the power of investing. So $12.50 a day with roundups turned on, $25, $5,413, plus this reoccurring investment of just $12.50 a day at 60 would be worth $606,000, which honestly, $12.50 isn't even all that much. Let's see what happens when we bump it up to $25 a day. As you can see, our current would be 606,000. It almost doubles, which I guess makes sense. We're saving twice as much money, but our investment almost doubles when we change that daily investment from $12.50 to $25. And then if you take it, keep going up, 74. Look at how much it just changes over time. The amount of interest you earn over time just gets more and more and more, to the point where it starts making money for you. It's passive income, guys. I'm no genius. I should not be your teacher when it comes to this stuff, but if you want to learn more about passive income, I would just suggest Googling it, or just maybe looking up some other more intelligent people than myself. Again, this is just for entertainment purposes. Alright guys, there you have it. There is my portfolio, my $25,000 portfolio, and here's the kicker. Here is the kicker. I'm going to be getting paid by YouTube monthly now, thanks to you guys for your support. This payment, this past billing cycle for me is going to be an absolute record, which, don't worry, I'm still going to be doing a channel analytics video, but I felt like this needed to be a separate video for you all. And I'm really proud of the amount I've been able to save over the last year, and we still got work to go. We still got room to grow. What I haven't showed you is the mistakes that I made in the beginning of investing, and it was silly rookie mistakes, and I'm still climbing out of that hole. But anyways, guys, that's gonna do it. Leave a like, comment, subscribe. I will see you guys in the next one. So, if you're watching this during the day, then have a relaxing rest of the day. And if you're watching this at night, then have a great night sleep.